Welcome. In this video, how will ZBCN coin price move? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. A careful examination of the chart reveals a structure where the price has been forming lower highs over a certain period while maintaining a horizontal support line. This formation is commonly referred to in technical analysis literature as a descending triangle. This pattern indicates that prices are consolidating and have the potential to break out in a specific direction. While descending triangles are often considered bearish formations, their outcome can vary depending on context, the preceding trend, and volume profile. In particular, when the market structure is bullish, such patterns may break to the upside. In the current chart under analysis, the structure points to a classic descending triangle. With each attempt to rise, the price has created lower peaks, indicating that the market's upward efforts are being met with selling pressure at increasingly lower levels. On the other hand, it's clear that buyers are responding firmly at a specific support level. This suggests that investors continue to take long positions in a defined demand zone. The shape formed by the intersection of these two lines signals, in technical terms, that a decision point is approaching. In a descending triangle, the upper trend line, i.e., the resistance line, gains strength with each price contact. This is because sell orders continue to be placed at that level. However, the sustainability of this situation is limited. Each new wave of selling pressure results in stronger tests of the resistance level. Frequent testing of this resistance increases the probability of a breakout. Particularly when the price consolidates and compresses near the upper trend line, the chances of an upward breakout grow. The direction of the breakout is critically important in such triangle formations. If the price manages to break above the descending triangle's upper boundary, this signals that investor sentiment has shifted and buying positions are being established. One of the most important factors confirming the strength of this breakout is volume. If the price breaks above the triangle's resistance line with increased volume, it confirms that the move is not a false breakout, but a genuine trend reversal. Furthermore, a breakout to the upside from this formation is not just a short-term move. It also reflects a shift in overall market psychology, indicating that sellers are losing control and buyers are gaining dominance. In this context, a breakout above the resistance line of a descending triangle can be a strong indication that the market is entering an uptrend. Especially if this breakout is followed by closes above previous peaks, it could mark the beginning of a new bullish wave. Currently, the price is positioned very close to the upper line of this descending triangle, signaling that a decision point is imminent. This area should be monitored closely by investors, as the market's reaction at this level will be key to the future of the formation. If the price breaks above this line and manages to close a few candles above it, this confirms that the formation has broken to the upside and new target levels can be set. Typically, after such a breakout, the price is expected to move a distance equivalent to the height of the formation. This provides investors with a potential target range. Additionally, the possibility of a retest should also be considered in such breakouts. That is, the price may pull back to retest the broken resistance line. A successful test, where the price holds above the broken level, boosts investor confidence and lays a strong foundation for continued upward movement. During the retest, a drop in volume and limited selling pressure are positive signals for the continuation of the uptrend. But we can't rely solely on trends and formations. Let's take a look at other metrics too. Stay tuned. A careful observation of the chart shows that the price is currently in a horizontal consolidation at a specific support level. This area is a significant technical zone that has been tested multiple times in the past and has consistently been defended by buyers. Each time the price approached this level, it typically received a reaction and moved upward again. However, in the current scenario, the fact that this support level has been tested excessively is starting to signal that it may be losing its strength. In technical analysis, support levels that are tested frequently tend to weaken over time, as buy orders at that level begin to diminish and sellers exert more pressure. If the price fails to break this support area, it may trigger a short-term upward move, as it has in the past. However, the current market structure suggests that this support is now on the verge of breaking. Therefore, the critical threshold for investors is whether or not this level will be breached to the downside. If this level is broken, according to technical analysis principles, the price may continue to decline toward the next support zone. Such a move could be strongly triggered, especially if the price fails to hold at this level for long, and a heavy wave of selling pressure pushes it downward. One of the most important aspects to watch in these types of support breaks is whether the breakout is genuine or false. If the price briefly dips below the level with a wick, and quickly recovers upward, this is considered a false breakout. However, if the price falls below the support line and stays there with several consecutive closes, it is considered a valid breakout. In this case, the majority of market participants may expect the price to decline further toward the next technical level and increase their short positions accordingly. The breaking of a support level affects investors not only technically, but also psychologically. These zones are usually areas where investors feel safe. Therefore, dropping below this level can trigger panic selling. Investors who previously entered long positions at this level may activate their stop-loss orders to protect their capital. This can lead to sharp downward moves in the price. For this reason, support breaks often produce highly significant technical signals. Once the price breaks the current support area and a downward move begins, another factor that determines whether this move will continue is volume. If high trading volume is observed during the breakout, it indicates strong selling pressure and investor conviction in the move. This increases the likelihood that the price will reach the next lower support level. On the other hand, if the volume is low, the permanence of the breakout may be questioned, and the price could soon return to higher levels. Finally, when tracking these types of technical analysis structures, investors need to be patient, avoid acting out of panic, and always wait for confirmation signals after a breakout. Not every breakout guarantees the next move. Therefore, it is crucial to closely monitor whether the price truly settles below the support level and whether the breakout is sustainable. If all these criteria are met, there is a high probability that the price will move toward a lower support zone. MACD, or moving average convergence divergence, is one of the most commonly used oscillators in technical analysis for understanding market direction and momentum. The data provided by this indicator is not limited to just the crossing of lines. The levels at which these crossovers occur and the angle of the movement are also critically important. In the current analysis, there is a potential for the MACD lines to break to the upside. If this breakout occurs, it could technically signal the beginning of an upward price movement. An upward breakout in the MACD typically starts with a crossover between the signal line and the MACD line. If the MACD line crosses above the signal line from below, and this crossover begins below the zero line and trends upward, it is considered a positive development in technical analysis. Such crossovers often indicate that bullish momentum is starting to build. If the breakout occurs above the zero line, it further strengthens the bullish market outlook. To understand the potential impact of the MACD breakout on price, it is helpful to look at similar past scenarios. Historically, when the MACD lines made an upward crossover, the price usually reacted in the same direction. This shows how investor psychology can be shaped by technical indicators like MACD. Many traders open positions based on these signals, turning technical signals into self-fulfilling prophecies. We should wait for the MACD crossover. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.